A lot has happened in the financial world last week, and today we are going to break it all down and, more importantly, explore how these events might translate into investing opportunities. But before we jump in, please don't forget to like this video and subscribe to my YouTube and Twitter account. It helps me a lot to promote my videos. Thank you, and let's get started. Let's start with one of the biggest stories of the week, Berkshire Hathaway's earnings report and the company's legendary annual shareholder meeting. Warren Buffett announced he will step down as a CEO by the end of 2025. His successor will be Greg Abel, a move that's been very anticipated since 2021, but the timing caught many investors. Buffett, however, isn't leaving completely. He'll remain chairman and a major shareholder, with absolutely no intention of selling his stock. Unfortunately, I wasn't able to attend this shareholder meeting in Omaha this year, but judging by videos and this photo, shareholder meetings attract no fewer people than some rock concerts or festivals. Now let's look at the numbers. Here we go. Berkshire's cash pile has grown even larger, now sitting at a record 384 billion in cash and cash equivalents. This is striking, especially considering the market rebound and rising investor optimism past few weeks. Most of the cash parked in US Treasury securities, and here's a fun fact. Buffett holds around 5% of all US government debt, more than even the Federal Reserve itself. That's mind-blowing. And let's move to the performance. Since its inception, Berkshire has delivered 5.5 million % in returns, compared to just 39,000% for the S&P 500. Let me tell you something. Imagine if Berkshire stock dropped 99% today, it would still have outperformed the index. Buffett truly is a living legend, right? Next up, Waymo. Waymo is a Alphabet subsidiary. Past week, they revealed that they now operate over 1,500 robotaxis, with plans to add another 2,000 vehicles through a new partnership with Magna. These next-generation vehicles are being assembled in a brand new factory in Mesa, Arizona, strategically located near major Waymo markets like San Francisco, Los Angeles, and Austin. Waymo says the cars can now go from factory to public service is under 30 minutes, a game changer for development speed. They're also planning to integrate their sixth generation self-driving system into a common platform like Zeekr RT later this year. Let's move forward to the semiconductor world with focus on AMD's latest earnings. I came across charts on Twitter comparing AMD and Nvidia's revenue streams. Take a look. AMD's revenue streams is far more diversified here than Nvidia's one. Nvidia's revenue is heavily concentrated in data centers. Another chart I want to show you. Another chart is AMD's data center growth is slowing down last quarter, but Nvidia's one continues to surge. Just take a look at this rocket. Let's move to the numbers. EPS $0.96 versus $0.94 expected. Revenue $7.44 billion versus $7.13 billion expected. Data revenue up 57% year over year. However, AMD took a hit from US export restriction on AI chips with 80 million in cost last quarter and 1.5 billion expected through the fiscal year. That's big blow, especially as the company ramps up in competition with Nvidia in the AI GPU space. CEO Lisa Su remained optimistic, citing strong demand for EPYC processor and confirming that major AI developers using AMD chips not just for training, but also for inference. Inference is a critical phase of AI development. Gaming revenue dropped 30%, but client PC sales jumped 68%. So AMD is growing, right? But it's in geopolitical crosswind. Long term, the AI race with Nvidia is far from over. Let's move forward. Yeah, let's talk about Taiwan Semiconductors. TSMC just broke ground on its third chip factory in Arizona, expanding in the US to support key customers like Nvidia, Apple, AMD, Qualcomm, and Broadcom. This is part of a bigger plan to localize production and hedge against geopolitical risk, especially amid ongoing US-China tension. The first Arizona fab started production in late 2024 using N4 process nodes. The second fab already built will use 3nm tech, and third and fourth fabs will bring N2 and A16 nodes. These are some of the most advanced chips in the world. They're also planning new advanced packaging plan and R&D centers aiming to create gigafab clusters to power AI, smartphone, and high-performance computing growth. But it comes at cost, of course. TSMC warned of gross margin dilution. Yeah, here we go. Gross margin dilution of up to 4% per year in the near future due to US expansion cost. Still, this is long-term bet on US demand for AI chips and serious reshaping of global semiconductor supply chain, right? Let's move forward. Lastly, let's take a moment to talk about Amazon huge move. Amazon just announced $4 billion investments to build a first AWS infrastructure in Chile, set to go live by the end of 2026. This marks the third AWS region in Latin America after Brazil and Mexico. And it's a clear signal on how serious Amazon is about dominating in the cloud game. So why Chile, you can ask me? There is a booming demand for cloud service in the region, and AWS stepping in to offer lower latency, better data residency, and higher resilience, all critical for sectors like finance, government, education, and retail. But it's not just about data centers. Amazon will hire and train local talent, build out energy efficient, far air-cooled infrastructure, and ensure minimal water consumption. Even better, since 2023, AWS of energy use in the region is offset by renewables 100%. Also, cloud demand in the region expected to grow over 20% annually until 2028. That's it from my side today. Don't forget to like this video and subscribe to my YouTube channel and Twitter account. Thanks for watching, and as always, spend your money wise.